Sofi stock news: why time is running out to buy SOFI stock. Hey there fellow investors and tech enthusiasts, welcome back to another exciting episode of our YouTube channel. Today's discussion revolves around Sofi Technologies and its stock. In this video, we will assess 3 articles, beginning with one titled Chief Risk Officer Aaron Webster sells 215,299 shares of Sofi Technologies Inc. We'll delve into why this may not be a significant concern, as insider stock sales can occur for various reasons, while purchases typically signal confidence. Additionally, we'll review another article titled Sofi: The Breakout Approaches in 2024, which emphasizes the current opportunity for investors to acquire the stock at a reasonable price before expected profitability in the current quarter. The article outlines price targets, predictions, and how Sofi is approaching a critical inflection point, anticipating a surge post-profitability despite potential pullbacks. Sofi Technologies, a fintech company operating as a digital bank, recently saw its chief risk officer, Aaron Webster, sell 215,299 shares. Despite investor concerns that this signals a lack of faith in the company, it's crucial to understand Webster's role in managing the company's risk exposure. His responsibility is to ensure Sofi operates within its risk strategy, maintaining financial stability. The sale, part of a total of 415,299 shares sold by insiders in the past year, needs to be contextualized. While insider selling occurred, the video highlights that overall there has been more insider buying than selling, indicating positive sentiment. The video further explores possible reasons for Webster's sale, such as personal financial needs or contractual obligations. The key point is that insiders typically buy when they anticipate future share price increases, contrasting with various reasons for selling. The overall sentiment is positive, with critics potentially blowing the news out of proportion. Negative interpretations are debunked, emphasizing the millions of dollars worth of shares bought by insiders during the same period. Shifting focus to Sofi's future share price, the video notes the current trading price of $7.23 and presents analyst opinions ranging from a surge to $15 to a potential fall to $3. The speaker personally estimates the company's worth to be between $9 to $10, with the anticipation of surpassing this estimate as the company grows. Positive indicators for Sofi include achieving its 10th consecutive quarter of record revenue, diversification of revenue sources, and adding 717,000 new members in the third quarter. Management projects breaking even in either the current quarter or the next, heightening the urgency for potential investors to enter at the current price point before anticipated share price growth upon profitability. On this channel, we've consistently expressed a strong belief in Sofi shares, recommending purchasing the stock around $5. If you followed this advice, you've likely seen substantial profits. However, we emphasize the importance of prudent portfolio management and avoiding overallocation, particularly in risky growth companies like Sofi. It's advised to limit the initial portfolio allocation to such companies to no more than 5%. The positive outlook for Sofi stock as a long-term investment opportunity is reinforced. Despite the potential for short-term gains, investors are cautioned against taking on unnecessary risk. The speaker suggests retaining at least a core position in Sofi shares, but encourages taking some profits, especially following sudden and significant surges in the share price. This strategy acknowledges the common occurrence of a pullback after such rapid increases. The rationale behind advocating for holding a core position lies in the recognition that Sofi is still in the early stages of its long-term growth journey. This perspective is supported by the company's quarterly earnings reports, which evidently demonstrate its positive trajectory. Investors are encouraged to navigate the market with a balanced approach, considering both short-term profit-taking opportunities and the long-term growth potential of Sofi. Let's delve into the key metrics that investors should be attentive to. First and foremost is the top-line growth acceleration, focusing on sales and revenue. Sofi reported a remarkable $537 million in this category, signifying a remarkable 21.7% year-over-year increase. Notably, this exceeded management's guidance and expectations, surpassing estimates by approximately $22 million. The significant outperformance suggests the potential for profitability, surpassing current projections. A noteworthy aspect is the sustained demand for loans despite higher interest rates. This contradicts the conventional expectation that rising interest rates would lead to decreased demand for loans. While other banking institutions institutions are experiencing this decline, Sofi has maintained and even increased loan growth demand, presenting a substantial competitive advantage. The anticipation is for continued robust growth, and it's striking how Sofi has outperformed larger legacy banks, steadily gaining market share and disrupting the banking sector. Despite not having reached the break-even point yet, the management's statement about anticipating profitability in the fourth quarter of 2023 is highlighted. This quarter, which is the current one, is expected to mark a crucial turning point for Sofi. The company's ability to thrive and outpace expectations, even before achieving profitability, underscores its resilience and potential for sustained success in the future. Upon reaching sustained profits, Sofi's share price is expected to attract significant investor interest, particularly from risk-averse investors seeking a safer investment option. The company's positive financial indicators include a $2.9 billion increase in deposits, a 23% growth in the third quarter, totaling $15.7 billion at quarter end. Notably, personal loan originations reached a record $3.9 billion in the same quarter, marking a 38% year-over-year increase of nearly $1.1 billion. The end of the student loan moratorium has positively impacted Sofi, with student loan origination volume surging from $462 million to $919 million in the third quarter, reflecting a 101% year-over-year increase. While the company progresses towards GAAP profitability, it's essential to address potential concerns. Sofi plans to increase share-based compensation, alongside higher depreciation and amortization. Though common in technology companies, this may impact the company's overall stock performance and investor perception. Despite these challenges, management raised revenue guidance to an impressive range of $2.04 to $2.6 billion, coupled with strong EBITDA. The key takeaway is that, despite rapid revenue growth and anticipated profitability in the fourth quarter, Sofi is intensifying its focus on stock-based compensation. Investors are advised to be aware of these factors. The video suggests that accumulating shares at $7 or below presents a favorable buying opportunity. An average cost basis of $7 or lower is considered advantageous, given the anticipation of a sustainable stock price between $9 and $10 post-profitability. As Sofi continues to exceed expectations in revenue and earnings, the overall outlook for the company is highly positive. The video concludes by inviting viewers to share their thoughts on how high they believe Palantir Technologies will go after achieving profitability in the current quarter. And that's it. We hope you enjoyed this video. Don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us in this video, and we hope to see you in the next one. Happy investing!